park in the world. It's true. They're the best ponies. They are. You can ride them. You can date them. You can grab them by the pony. This is the Afsluitdijk. It's a great, great wall that we built to protect us from all the water from Mexico. We built an entire ocean, okay? An entire ocean between us and Mexico. Nobody builds oceans better than we do. This ocean, it is so big, you can even see it from the moon. And we made the Mexicans pay for it. It's true. You've got the Trump Towers, we've got Lee Towers. We've got Maduro Town, which is the greatest miniature town in the world. It's great. Well, it's tiny, but it's great. And the squares, they're so small, you don't even need many people to film them. It's great. This is Gerry Eickhoff. In December, we've got this scandalous tradition of Black Pete. It's the most offensive, the most racist thing you've ever seen. You'll love it. It's great. We also have a disabled politician for you to make fun of. Her name is Jette Kleinsma. She's from the Ministry of Silly Walks. You can do a great impersonation of her. Can't wait to see it. People tell us, very important people, they tell us we've got the best tax evasion system God ever created. It's just unbelievable. You should tell your sons to put all their businesses here. You'll pay no taxes at all. Zero. It's ridiculous. And last but not least, we've got a great, great, great dependency on the United States. It's huge. If you screw NATO, you're gonna make our problems great again. They're gonna be huge. They're gonna be enormous. It's true. Please don't. We totally understand. It's going to be America first. But can we just say the Netherlands second? Is that okay? Thank you for watching and best wishes. We've got the best wishes in the Netherlands. They're great. It's true.
Last night we had a chance to talk with Martin Armstrong on bonds, interest rates, on the dynamics that are happening geopolitically that are going to drive the markets going forward. And so today I'd like to give a warm welcome. Thanks, Marty, for coming back and joining us again.
Well, thank you, Mike. I mean, I think I've been doing Vancouver since 1985 or 87, something like that.
Why don't you tell the truth and tell people you've been doing it since I didn't have gray hair? That's how he does it when I talk to him personally. And by the way, Marty, I've got one on you, and I want to remind people, Marty doesn't know this part, but I talked to his office, and as I mentioned earlier today, that he's done a brand new report on Canada. And so after I had a couple of questions, I talked to Vicky, just so you know, Marty, so don't be mad at me. And this report is half price, but just for the attendees here. And I can't say it on the radio or anything. It'll be available if you just go and sign up at the Princeton or Armstrong Economics desk there. And so there you go, Marty, thanks. I started complaining about the Canadian dollar discount. That's how this started. I said, we can't just give it in Canadian funds. By the time I was done, if you think Donald Trump can negotiate a deal, you should have seen me. Started it let's just make it Canadian dollar. By the time I was done, we got the half price on that report. So I just want to remind you to go to the Princeton desk, and it leads into what I want to talk to Marty about. But first, Marty, let me just ask you this. Obviously, Middle East companies, you're in Switzerland, you're in London, you're in all over the world. I'm just wondering, what are the questions that you're getting right now? What are on you obviously deal with major, corporations, major pension funds, pools of money. What kind of things are they asking you right now?
Well, one is obviously Trump, and his tax plans are very, very interesting, and they're beginning to realize that he really does mean business. I mean, he's been very uncharacteristic for a politician. For the first 2 weeks, he's been out there actually doing things he said he was going to do. So I don't think people quite appreciate, but by saying that he's going to make it just a 10% tax, bring back the money, any corporation that doesn't do so would be a major short. Because honestly, you'd have to be brain dead not to bring it back in while you can. And the same thing on capital gains and reducing taxes to this level would be really, beneficial for anybody who's looking to sell a house or to finally take a profit on something. You're going to save 50%. So that's going to, have a lot of impact. And honestly, I've worked on Capitol Hill for many, many years, and my conclusion is that the Democrats always stand up and say, oh, they want to tax the rich. But largely then so they can get bribes to create, loopholes for them. And everybody else ends up paying more taxes anyhow. So it's really kind of, I don't think taxes are necessary at the federal level anymore. You only need them locally for schools and roads and things of that nature. But, let's be honest. Every year they have, Obama's had deficits of $1 trillion. That was the entire national debt when Reagan came in back in 1980. And they never pay anything off. So all this thing, we're going to take from the next generation, they've been doing that forever. It's just coming home to roost. That's pretty much the problem. The other issue that a lot of people are very, very concerned about is the refugee issue in Europe. And it's likely to take Merkel down. And with that, there goes really the euro. So those are the two big issues. And a lot of people outside the country are looking at effectively that Trump is going to create more of an economic recovery in the United States, and they're looking at Europe as being absolutely horrible at this stage. Britain is starting to look very good. There are a number of companies that have announced that they're leaving the EU and actually moving to Britain. You have Ireland in a dispute now with the EU, saying that they have to tax Apple $13 billion. And what that is effectively retroactively changing tax rates. So they're saying, oh, that's not fair that you cut a deal with Apple that was cheaper than any other country. So you have to charge the maximum of what other countries would charge. It's just, honestly, this is why Europe's being torn apart.
Let me just add that. I wanted to talk today about stocks, and we'll get to gold in a minute, but let's start with the Dow Jones move and the S&P and NASDAQ. I don't think you're surprised by that. You've been a bull. But I just wondered, where do you think we're fitting in that scenario? Maybe give us the long-term view first with that kind of capital flow, and we'll come to the short-term in a moment.
Well, it's two things. One is that we're in a private wave. So basically private assets do better than government. And I know a lot of people are out there, and probably the majority keeps talking about an 80% crash in the stock market. Just ask yourself this. Okay, fine. Where are you going to put your money? You run to the government and say, oh, okay, fine. Let me buy some of those bonds at negative rates. Do people trust banks? There's no place to go. That's why the stock market is where it is. And it's just been crawling across the highs. So we're looking at, our first real resistance in the Dow really starts in this 21 to 23 area. And then once we get through 23, honestly, we're going to see what we call a phase transition. We should see the Dow probably going up to maybe closer to 40,000, but looking out probably around 2020 or so. And that's largely caused by two factors. One, is that you have domestically people have been so negative, and you've had effectively really retail participation, Gallup poll, we're at record lows. So how can this be a major high? It's not a bubble. And then you have the problem with the euro, so you have capital flight coming in. Then you really just have to look at there's only one place to go as governments are getting more and more in trouble, and that is effectively private sector assets. That's it. Just the government's getting very, very aggressive on hunting money every which way. You have India canceling currencies. You have, even Poland. Big signs when you land there. If you have more than 10,000 euros worth of anything, you better declare it. So they're just hunting money. They need it so bad everywhere. So they're just broke.
Let me ask you about let's come back and go to the short term first, because one of the challenges that people have, and I think it's a big investment mistake, and Victor and Aaron and I talk about it all the time, is that their analysis doesn't fit their time frame. They got to match them up. So it's really funny. We've got a lot of investors, and they think like traders, but that's why they're interested in the short term. But I don't want you to miss that long term message that we're in a private wave. As Marty says, that we're looking at really significant moves up, and it really to me comes back to one of Marty's original pieces 30 plus years ago, is that who do you have confidence in? Private sector and public sector. Who do you think is going to do better? Government bonds or Johnson & Johnson, who's never missed a dividend and is always increasing? Well, my opinion simply is that I'd rather my money with a private sector company like that. So that's what spurs it. But we seem to get confused. And Marty, that's why give us a little bit of the short term here so they know what's coming, so they don't get scared out by bumps or bruises if you're an investor.
Well, what really makes a market move is the majority always has to be wrong. And it's just the way it is, because everybody will get short and they've been trying to pick the high and the down. It doesn't go down. It rallies back up. That's always the short covering. You just look at the list of analysts. I think, honestly, probably more than 90% of what I've seen, they're all negative. Some of them are just doing it for political reasons. You have Soros coming out saying, "Oh, sell everything, whatever." But he's also on a political side. Then you have Warren Buffett saying, "No, he's been buying the Trump rally." So, those two are at opposite ends. But the vast majority of other people, they're very, very negative, and that's the fuel. When we get into a major high, that's when everybody's bullish. And back in 1989 in Tokyo, when I had called you and said this is the high of the Nikkei, I went to a meeting, and we were looking at 40,000, and this was going to be it. And I went to one of the big firms, and they said, "No, we think it's actually going to go a bit higher." They were saying 50. And then privately, they said, "No, really 100. I said, "Okay, very good." I knew that had to be it. But it's just the way it is. The majority must be wrong, and that's what fuels it going up. So when everybody is up there at the highs and they're expecting these astronomical rallies, that's why market panics. It's not short selling. They've never found some mythical huge short that sells the high. At the Brady Commission, and I had explained to them, I said, "Well, this is what makes it go down." I said, "Very simple. You basically have something that scares people. They turn around, they try to sell, and then the worst thing that happens, no bid. That's when you get these flash crashes. So it's not a short position, it's just no bid. That's what we're looking at in the bond markets. You know, governments roll their debts, so they issue new debt to pay off the old one. What happens when there's no bid? That's when you're going to see interest rates go up. You're going to see capital fleeing to the stock market. There's no other place to go. And you can look on our site. We published the PE ratio. You know, people say, oh, you got to be wrong. The high-end PE ratio is about 23. I said, is it really? Take a look. It reached close to 50 on the 2000 rally. But the historical high, about 120, when? At the bottom in 2009. Why? Because people they don't care if they're making a profit. It's just, am I going to get most of my money back? Let me park it. I don't know what's going to happen with banks. Are they failing? What's going on with governments? I know GM will be there. And that's basically what they do. They're just parking. So it doesn't have anything to do with earnings or the traditional things that people talk about for, oh, what's a bull market? How much are these companies really making, etc. All that type of analysis is old-fashioned. It goes out the window. At those points in time, it's like, where can I put my money that I know I'm going to at least get something back? Stocks, that's it. Government, like I said yesterday, I mean, Italy, what they did, they couldn't pay the debt. So if you had 90-day paper, they just said, oh, by the way, we're retroactively now changing it to 10-year. In the United States, they say, oh, well, like Detroit never defaulted. Yes, okay, fine. They suspended payments in 1937. When did they resume? 1963. They did default, fine, technically. But if you were retiring in 1940, I don't think you had anything.
Sorry,
so just understand those aspects.
You were saying then the Dow Jones, once we get above, say, that 23,000 mark, then it's sort of open space going much higher. What do you see for the Toronto Stock Exchange?
Pretty much the same thing. We put it in that report, but we get to a stage here where you don't trust government, whether it's whose it is, your own, etc. I mean, there's been government papers coming out showing that Trudeau is his whole plan is just completely bogus. The deficits are going to be much bigger than what he anticipated. And he's just been running on the same old-fashioned stuff that doesn't work. I mean, Hillary, the same thing. Look, every election, we're just going to tax the rich, we're going to do this. It doesn't work. And they don't want to admit it, but the times when you lower taxes, what happens? You're putting more disposable income in everybody's pocket. You're better off spending the money than some politician trying to figure out how to stimulate the economy. So he's taking the 20 bucks out of your pocket and figuring who's he going to give it to. It's usually somebody that's paying him off. So it's better off lower taxes. The individual is far better at deciding what's worthwhile to put money into than the government. That centralized planning just doesn't work. That's why communism fell.
Let me turn to gold for a second here. I've got a couple things I've got to get to. Again, your model was absolutely correct. You were joining us at the Gold Summit. You said, let's look at about a 1040 mark. We went below that, or went to that rather. We've had that rally, obviously, to 1350. Then you said it's going to probably dip below 1200. Do you want to give me again the long-term, short-term on gold?
I mean, eventually gold's going to move up. And we'll break out. But you have to understand, it's only going to do so when the average person perceives that there's trouble. I mean, naturally those that are historically bullish gold, it's a small minority. It's when the average person on the street begins to talk about it. But one of the problems we do have, and it's showing up in India already. Demand for gold in India is off sharply because the younger generation is not buying it like the older generation. And we do have these generational shifts. And you can imagine, I mean, you go to Starbucks, whatever, the younger kids, they just hold up their phone to pay. They don't even have cash. And if you walk into a Starbucks with a silver quarter and you say, hey, listen, this is really worth $5, then yeah, I should be able to get a coffee with that. And they go, no, it's a quarter. So there are differences between generations, and we have to respect that things are changing a bit. And the idea of going back to gold standards or something like that, I mean, it's not practical. It's not the fact that money isn't backed by something. The fact is that we have corrupt politicians. That's really the issue. We had a Bretton Woods gold standard. Okay, why did it break? Because of the politicians. They printed more and they tried to maintain a ratio. I mean, you can't do this. That's the same thing with the Swiss franc peg. Anytime you try to peg something and say this is always going to be worth this, it fails. Because there is a business cycle. There's booms and busts. So, I mean, gold still has the risk of going down yet. We haven't really gotten through any major resistance. And when I said, okay, from the 1045, we had to go up. We had to close above 1362 on a monthly basis. We went right up to it, failed. And I said, okay, fine, we have to close above 1340 on a quarterly basis. It came crashing down to make sure it avoided that one. So markets are very coordinated. Everything's really connected. So our forecast that gold would decline, and from 2011 is also contrasted with our forecasted time. We said that Dow's going to go up and make new highs. So you can't be right on one and wrong on the other. Everything is connected here, and it's where capital will move from one sector to the next. Eventually, the two will line up, but that's when people really begin to question whether government's going to survive. And I think what you're going to see is that keep an eye on Europe, because once you begin to get a crack in the EU, then it becomes like dominoes. I mean, you can read, it's free online, you can read Herbert Hoover's memoirs from 1931. And the first bank that failed was in Austria, then it went to the Germans, and etc. It just started like a domino collapse, and that what created the Great Depression. And Herbert Hoover wrote in his memoirs, he said, capital acted like a cannon on the deck of a ship. It was shooting off so fast in different directions because it was like a hurricane. He said, we couldn't form a committee fast enough to figure out where we'd go next. And if you just look at the comments, as soon as Greece got in trouble back in 2010, what did the traders do? They looked around, they said, oh, who's next? Oh, Portugal, Spain, Italy, France. This is the way trading rooms work. Once they make money on one trade, they look around for the next. So you're going to see this happen again. Once one country backs out of the EU, you're going to see a domino effect. So watch for the first one. I got a feeling it might be Greece.
Let me go on to just, are silver and gold related in that scenario? What do you see for silver?
I think silver will probably actually begin to finally close the ratio a bit more, but you're looking at probably going out from really from after 18. 2018 seems to be when we're going to begin to get a monetary crisis cycle beginning. And keep in mind, we have all these elections coming up this year. I've been calling it from last year going into 17, a year from political hell. Because whatever we ever thought about the future has been just turning upside down. I mean, you got Trump, you got Brexit. Now we have, we still have Netherlands to go, we have France to go, we have, and then we have Germany. If all those flip, what is the future going to be like? You're going to have to rewrite all the books and the scenarios. So that seems to be when the monetary crisis begins to come. It's going to require a collapse in confidence. And once people begin to realize that Europe is the lethal weapon to the world financial system, then things are going to start popping. And that's why I say on the Dow, between here and 23, people are still going to fight it. Okay, when you cross that 23 area, that's when people are just going to throw in the towel and say, that's it, it's just going up. But until then, they're still going to see the majority of these analysts, oh no, this is a major high, I'm telling you it's going to fall 80%, whatever. I mean, they've been saying this since, 2010.
Let me ask, just before we let you go, I've got a couple more things. Just a quick take on oil. We're in Canada, so we have to know.
Oil, I mean, the supply has increased, but our model's been still, short-term a little on the bullish side. We didn't elect any of the major yearly bearish reversals. So I tend to think that it's probably indicating that we're going to have war coming, and that's going to be more or less over in the Middle East. So that will also help give a bid to oil. But I think you also have this people, the governments have been touting global warming largely for taxes. But the energy output of the sun beats like your heart. And unfortunately, we're heading back into what many real scientists are talking about as being another coming ice age. I mean, it's been a brutal winter so far, and I just got a text just this morning from Ashley, who's over running our office in Abu Dhabi, and he says, it is like, it's 15 degrees. He's never seen it this cold. He said, we have all kinds of sandstorms. He says, I don't know what's going on. He said, I've never been here that cold in the Middle East. So it's all over the place. I mean, it's been a kind of brutal winter, but this is like 3 in a row now. And you have to understand, if we're going back into a colder period, the danger there is that then you create shortages in food supplies, things of that nature. And it looks like wheat, things of this sort, will actually start to rise quite aggressively, but probably after 18.
Let me finish with this, Marty, and ask you, obviously people here, there's a level of change and turmoil at times. If you were going to say, look, you want to put some sleeping money somewhere, we want to be comfortable, from what I'm hearing, it's short-term paper at best. It's quality stocks, because that's what the Dow represents, because they'll be the first to move, and U.S. dollar-based stuff. Is that a pretty good summation of what you're saying?
Yeah, pretty much. I mean, you can on gold. I mean, I would recommend, just to be safe, things like older gold coins that are still trading close to bullion. Like $20 gold pieces out of the U.S. Sovereigns have a little bit more of a premium. And the only reason I say that is that they have been tracking gold, who buys it, who sells it, and things of this nature. And at least you have maybe something you can say is a collector's item rather than a bar. India's kind of looking at going after gold. I mean, these people are desperate for money, and that's what you have to understand. I mean, 20 years ago, we could hop on a plane and have a suitcase full of $20 gold pieces and move. You can't do that today. So, I mean, you can't do it with cash even. So I think that, and I mean, interesting, I mean, I just bought something from a Sotheby's auction. Now, I've been buying from them for like 30 years. All of a sudden, they say, oh, we need your photo ID. I said, photo ID for what? They have to have on record actually who is buying what. So, I mean, government's tracking everything. There's not much that they're not tracking at this point.
Well, that's cheerful.
This is what happens when they mismanage things. You know, we are the ones they blame. And we're moving towards electronic currency. You're going to see that, and North America doesn't quite appreciate it. But that's what India really did. They canceled 86% of their currency because this is a G20 meeting that has been discussed. They canceled the currency because he's trying to force India into a modern, you know, electric currency type thing. In Europe, by September, all banks have to be able to have instantaneous transfers. So no more, well, I'll send you a check or a wire, and it takes, that'll be 6 days before it clears. It all has to be instantaneous in order for electronic money to work. So that is on schedule for September this year. Then you have to realize that the EU came out and they said suddenly, oh, it's a right that everyone should have a bank account. It's why? Because that's how they're going to track everybody. It's not a right. They're just basically saying mandatory, you're not going to have any cash. So Scandinavia will probably be the first countries to eliminate cash completely. But their view is they're not the problem, we are. And if everybody paid every dollar you found in a parking lot and you didn't give them their 50 cents, then they wouldn't have these deficits and everything would be fine. But as Milton Friedman said, if you put them in charge of the Sahara Desert, there'd be a shortage of sand in 2 years.
Well, Marty, I want to, and by the way, you don't have to wait until 2018 to see Marty. You can read his Canadian report here by going to the desk and signing up for it. It's brand new, but also he's been a great friend of ours. I'm privileged to call him a friend of mine, and on behalf of all of you, he's been a great friend of Money Talks over the years. Marty, thank you so much. Well, lots of food for thought, and I think that's why you're